Okay, so now we have identified the relevant journals, okay, for the business transaction that had happened from 1st June to 30th June. Okay, so now we are going to prepare the journals. Okay, now we are going to journalize the transaction. All right, so to journalize the transaction. All right, so let's look at here. So we have how many general journal? Okay. So we have one here, office furniture, to be recorded in general journal. We have one here, okay, where Puan Laila took goods worth 200 to be recorded in general journal. All right, and then do we have any other transaction? Yes, Puan Laila brought in motor vehicle also to be recorded in general journal. Okay, so general journal is okay, it's similar to the general journal that we have used in previous lesson, previous topic, which is topic 4. Okay, where we have the title for the general journal, we have the date, details, okay, debit, credit, okay, and however, okay, I'm going to add here one more column, which is the folio. All right, so the folio here is the reference code, okay, for the ledger, okay, for the ledger. So GL indicates general ledger, general ledger, general ledger, okay, general ledger 1, 2, 5, 2, 7, why 2, all right, because I have assigned GL2 for capital. So whenever there is other accounts, okay, whenever there is other transaction that affected capital account, then we are going to when we credit to capital, okay, so we are going to use the same folio. Okay, so this folio is the code for the ledger. All right. Okay. All right. So we have 3 business transaction to be recorded in general journal. The first one is where the owner brought in office furniture into the business. Okay, where they started the business with the office furniture. Okay, so debit furniture. Okay, 5,000, credit capital 5,000. All right, and then the next transaction, okay, in general journal is again the owner brought in motor vehicle worth 7,000. Okay, so debit motor vehicle, credit capital. Okay, at this stage, I hope that you understand the reason why I debit and credit. Okay, for example, motor vehicle is an asset account. So whenever the owner brought in motor vehicle or brought in any asset to the business, so now business has additional asset. All right. So what happened? Increase in asset. Okay. So at the same time, we're going to record the contribution from the owner. So the contribution from the owner is the capital. Okay. So when the owner contributes something, so the capital of the owner also is increase. Okay, so that's why we credit capital. Okay, and then drawings. Okay, where Puan Laila took goods. So this is decrease in equity, so we debit, but which equity account to be debited? Drawings. Okay, so debit drawings 200, okay, credit purchases 200. Okay, again the GL, the number of GL here 7, 8 is the number of the ledger. Okay, is the code for the ledger. Okay, I assign this code, right, depending on the number of ledger that I have prepared. Okay, so we have 3 types of ledger: general ledger, sales ledger, and purchase ledger. So sales ledger is specifically for account receivable. Purchase ledger is for account payable. Okay, all right. And then we debit here drawings, and then we credit purchases. Okay, because when the owner took goods, it will reduce the expense of the business, which is the purchase account. Okay, all right. So next journal to be prepared is purchase journal. Okay, purchase journal. So let's identify from here, do we have any transaction to be recorded in purchase journal? Okay, so we have one here. Okay, and then that's it, only one. Okay, where we purchase goods on credit from Sweet Kapi. Okay, so we're going to record that in purchase journal. Okay, so I haven't introduced you to the format of journals. Okay, for purchase journals, okay, we have here. Alright, so for purchase journals, okay, so we have here the title. Alright, and then we need to state the date. Okay, the details, the invoice number. Since this is the purchase journal, so the invoice number is the one that we receive from supplier. So receive from supplier. Okay, all right. Folio. Again, okay, this is referring to the ledger. Okay, so usually purchase ledger, okay, comes from purchase journal. All right, so Sweet Copy Enterprise PL1. This is the first account payable that we have, which is Sweet Copy. All right, okay, so the amount is 3,500. All right, okay. So we are going to record this. We are going to generalize this transaction, purchase of goods on credit from Sweet Copy on 4th of June. Okay, from Sweet Copy. So this is the invoice number. All right, and then we are going to assign Sweet Copy account as PL1. Okay, and the amount is 3,500. Okay, next is sales journal. So we are going to identify again from the business transaction. Do we have any sales journal? Okay, yes, we have sales journal here on 15th of June where we sold goods on credit to Koi Cupcake. All right, only Koi Cupcake, I think. Yes. All right, so sales journal, only one transaction, okay, to be recorded in sales journal. Okay, again, the format of sales journal, similar to purchase journal. So we have the title here. All right, and then we have the date, details, invoice number. All right, so invoice number here. Okay, so this one comes from our business. Okay, this is from our business. We are the one who prepare the invoice and then we give to our customer. All right, okay, so we are the one who create the invoice number, so we record the invoice. Okay, all right, folio for sales journal. Okay, we are going to transfer or post, okay, to sales ledger. All right, for account receivable. Okay, so for account receivable Koi Cupcake, okay, we are going to assign his account a code SL1. Okay, so this is only a code that we assign. Okay, so this is our first account receivable. Okay, all right, so folio amount 1,000. Okay, so 15th of June, Koi Cupcake. Okay, so this is the invoice number. Okay, sales ledger 1 to represent account receivable Koi Cupcake account. All right, okay. Next is written outward journals. Okay, so again, written outward is for return of purchase of credit purchase. Okay, return of credit purchase. Okay, so we return goods to Sweet Copy, so we record in written outward journal. All right, so only one transaction. Okay, for return outward, then we are going to record in written outward journal. Okay, so again, the format will be similar. You have the title, of course. Okay, the date, the details. Okay, folio amount, and here, okay, it is not an invoice but a credit note. Okay, so this credit note is the one that we receive from our supplier. Okay, so this is the one that we receive from our supplier, credit note. Okay, to indicate that, okay, they have credited our accounts when we return the goods. Okay, what account? Okay, our account receivable in, not our account. Okay, the supplier created an account receivable for us. Okay, so they are going to credit whenever we return the goods. Okay, all right, so 17th of June, Sweet Copy Enterprise. So this is the credit note number. Okay, folio. Okay, purchase ledger 1. So why purchase ledger 1? Because we have created account payable Sweet Copy Enterprise account, okay, for Sweet Copy. Okay, so we have assigned the code for Sweet Copy, which is PL1. All right, here. Okay, so whenever there is a transaction that affecting Sweet Copy, okay, so we are going to assign the same code because we are going to adjust in the same account. Okay, so PL1. Whenever we see Sweet Copy, PL1. Okay, so the amount is 500. All right, so next we're going to look for any return inwards. Okay, so we have one here, written inwards on 16th of June. Okay, when Koi Cupcake returned the cakes, okay, or returned the goods. Okay, so the format is similar to written outward. Okay, so this is written inward, date, details, okay, credit note, folio amount. However, this credit note, okay, this credit note is the one that we issue to our customer. Okay, so this is from the business to the customer. Okay, and Koi Cupcake, we have assigned, okay, code account SL1 to Koi Cupcake. So whenever there is other transaction affecting Koi Cupcake, it's going to affect the same ledger. Okay, SL1. So 16th of June, Koi Cupcake. Okay, so this is the number from the credit note. Okay, from the source document. Okay, and the amount is 310. All right. Okay. So next is cash receipt journal. Okay, cash receipt journal. So any amount of cash that you receive, regardless of the source of cash, we are going to record in. Okay, we are going to record that in cash receipt journal. So we have one here because we receive from the owner. Okay, this one is because we deposit cash into bank. Okay, so this is to record bank. Cash receipt, cash sales. Okay, that's it. Is it? Yes. 1, 2, 3. Is it? Yes. Okay. Okay, so let's look at cash receipt journal. Okay, so this is cash receipt journal. Okay, the format is we have many columns. Okay, for cash receipt journal. Okay, so we have column for the date, receipt number, details, folio, bank, cash. Okay, because we have cash at bank, cash in hand. All right, so for cash at bank, we put the name as bank. Cash in hand is cash account. All right, and then we have column for discount allowed, account receivable, sales, and other account. Okay, so basically we can say that the journal is divided into two parts. All right, so the first part is to record the amount of cash that we receive, and the other part is the purpose. All right, or the other account. Okay, how much do we receive? Okay, all right. Sorry, I think I draw the line wrongly. Okay, this can be considered as two part. Okay, but it should be here. Okay, it should be here. Okay, so if we were preparing general journal, okay, like the one that we prepared previously, on this side, all right, on this side, okay, on this side it can be considered as debit, bank or cash account, and on this side is to be credited. Okay, in this side we are going to credit account receivable or sales or other accounts. All right. Okay, so for cash receipt journal, 3 transactions affecting cash receipt journal. So the first one is the amount of capital, okay, that we receive from the owner. So the details is capital, happened on 1st June. Receipt number, we are the one who issue the receipt, okay, to the owner. All right. Okay, and then folio is GL2. So this is the code that you assign, because when you prepare the general journal for the first time, when we prepare when we generalize the office furniture just now, we assign the code as GL2. All right, so any transaction affecting the capital, we are going to assign to the same code, all right, which is GL2. Okay, and the amount is in form of cash, okay, cash in hand. So we are going to put that in cash column. All right. Okay, and then this is the amount of money we receive from our customer? No. Is it from the sales? No. It is from capital. Yes. So other account. Okay, other account. All right. Okay, and then we deposit cash money, okay, cash in hand into cash at bank. All right. So we deposit the money cash in hand to the bank. All right. So what happened here? We are going to record. Okay. So cash receipt, yeah, we receive cash in bank. Okay, we receive cash in bank. Okay, so we assign GL for here. Okay, most probably I have recorded somewhere else, okay, for GL3, so that's gonna be GL4. Okay, do we receive money from account receivable? No. Is it from the sales? No, it is from other account. Okay, right, that's it. And then for sales, okay, for sales, okay, and then we have made cash sales to Rina, right? Okay, so on 20th of June, okay, So we issue receipt to Rina. Okay, the item is sales. Okay, folio GL6, that one you create. Alright, and then cash 450 because we receive cash. Okay, if you receive any check, then it will be under bank. Okay, alright. So is it from account receivable? No. Is it because of sale? Yes. Then you put it here. If it is not, then it will go to other account. Okay, alright. Okay, next is cash payment journal. Okay, cash payment journal. Okay, so we're going to identify from the business transaction here which transaction will affect the cash payment journal. So we have here 1, 2, 3, 4, 5, 5. Okay, 1, 2, 3, 4, 5. Okay, should be 5. Alright. So let's see how many do we have here. Okay. So 1, 2, 3, 4, 5. Yes. Okay. Alright. So this is cash payment. Okay. So this is cash payment. So we have here date. Okay. Check number. Why check number? Because sometimes instead of using cash money, okay, we make a payment using check number. Okay, or maybe if you prepare voucher to support the cash payment, you can slash here as voucher number. Okay, so details. Okay, folio. Okay, to assign the code of the account. Alright, bank cash. Okay, and then we have discount received if any. Okay, so cash payment is credit. Okay, in cash account or bank account, this is credit, meaning that the other side is to be debited. Other side of account is to be debited, meaning when we go to account payable, we debit this amount. Okay, alright. So 7th of June, bank. Okay, because we deposit money. Alright, we deposit money. Okay, we take out from cash account to the bank. Alright, so for what reason we take out this money? Is it for account payable? Is it for purchase? No. Okay, is it because we want to deposit to the bank account? Alright, so we can see at cash receipt journal. Okay, we have recorded from the cash into the bank. So here we take out cash 6,000 for what purpose? Okay, because we want to put in the bank. Alright, so bank is here other account. Okay, alright, and then Puan Laila took money of 310. Alright, so took cash. Okay, so again we are going to record under cash 310, the amount of money that Puan Laila took. Okay, so why drawing? Okay, to indicate that the owner took the money. Okay, and then I assign GL7 for drawing account. Okay, do we pay our account payable? No. Is it because of purchase? No. Okay, because of other account, which is drawing. Okay, next is salary. Okay, so the date, of course. Okay, the check number. Okay, because of salary, we take out we issue check. Okay, of 600 ringgit. Okay, so salary I assign GL9. Okay, alright. So is it because of account payable? No. Purchase? No. Other account? Yes. Alright, so here. Okay, 30th of June. Okay, we made a payment to account payable Sweet Copy. So this is the check number. Okay, so Sweet Copy again, PL1. We already assigned to Sweet Copy, PL1. So PL1 again. Alright, so you made a payment to Sweet Copy using check. So check will affect bank. Okay, so bank, meaning that you take out money from the bank, 3,000 ringgit. Okay, to be paid to Sweet Copy. Alright, okay. So why do we take out this money? Okay, from the bank. Okay, for account payable. So we put it here, account payable. Okay, alright. For purchase, cash purchase from Pelangi. Okay, but cash purchase, so we record as purchase. Okay, so this is the code that I assigned for purchase account. Okay, so paid by cash. So we are going to deduct from. We are going to list the amount under cash. Okay, alright. Is it because of we pay to account payable? No. Because of purchase? Yes. Okay, alright. So that's it for the journal. That is how you transfer the information. Alright, and then how you prepare the folio. Okay, alright. How you record the transaction. Okay, how you journalize the transaction. Alright, at the end of the month. Okay, that's it. At the end of the month. Okay, you are going to close this journal, and you are going to total up this journal. Okay, the transaction in each journal. Alright, and then the total amount then you transfer to the ledger. Okay, all right. So how to do that? Okay, so let me change the color first. Okay, all right. So purchase journal, the total here. So at the end of the month, we are going to calculate the total. So the total is, because there's only one account payable here, so only one. So total is equal, which is 3,500. Okay, this amount then will be transferred to purchase account. So we assign code for purchase account GL8. Alright. Okay. We are going to do the same thing for sales journal, return inward and return outwards, cash receipt and cash payment. Okay, so for sales, we are going to total up this amount. So sales journal, at the end of the month, all right, in sales journal, we have total 1,000 to be transferred to sales account. And we assign the code for sales account as GL6. Okay, next. Return outward journal, we are going to do the same thing. We are going to total whatever transaction that we have recorded here. So 500, okay, to be transferred to purchase return account, ataupun you may call that as return outward journal. Sorry, return outward account. Okay, no problem. Okay, and then you assign the code. Okay, it depends on you. If there is a GL10 somewhere else, then we assign GL11. As simple as that. Okay, right. And then for return inwards, okay, again you're going to total up. Alright, and then the amount will be transferred to sales return account or return inwards account, and then we assign the account code, which is GL11. Okay. What about cash payment and cash receipt journal? Okay, for cash payment and cash receipt journal, okay, whatever amount that you receive, okay, for the bank, you total it up. Okay, similarly for cash, okay, this is the total amount received. Okay, and this will be transferred to, you total everything. If you have here cash payable, okay, if you have here sales, all right, so total at the end of the month. All right, okay, and then you're going to transfer GL3, GL4, GL6. Okay, what is GL3? GL3 is referring to, okay, if we look for in other account, okay, we may find that, okay, GL3 is for bank. Okay, meaning that GL4 is for cash, GL6 is for sales. Is it similar to sales journal? Yes, GL6 here. Alright, okay. So this represent cash sales. This represent cash sales. Okay, alright. And then we're going to do the same thing. We're going to add up everything. Okay, for cash payment. So this is the total cash payment for bank, for cash, and for purchase. Okay, so the total bank, total cash, total purchase. So bank again GL3, cash GL4, purchase GL8 should be equal to the account of purchase account in purchase journal, GL8. Alright, okay. Alright, that's it. Okay, next process is to post to the ledger. Okay, to post to the ledger. Alright, so you are now familiar with the ledger. Okay, alright, and it will be easy if it is from general journal. Okay, because you have understood the process already. Okay, so when you debit here at office furniture, meaning that you're going to prepare account called office furniture, and then you are going to put 5,000 on the debit side of office furniture. Okay, so let's see here. You have office furniture. You debit 5,000. Okay, details is capital. In capital account, you credit 5,000. Okay, for office furniture. Okay, where this transaction comes from? General journal. General journal. Okay, so folio indicates you can easily cross reference. Okay, from journal to ledger, ledger to journal. Okay, alright. Next transaction is for motor vehicle, and the next one is drawing and purchase. Okay, motor vehicle. Okay, so we have motor vehicle. Alright, we debit motor vehicle, so we debit 7,000. for capital. And then we look at capital. Okay, so capital, we have motor vehicle. Okay, we have here motor vehicle 7,000. Okay, why motor vehicle does not comes after office furniture? Okay, because I record according to the date. All right, actually I record date by date. All right, okay, but now we conclude everything. Okay, we just we prepare the journal and then we post to the ledger, we regardless of the date. Okay, all right. Okay, and then for drawing and purchase, meaning that we have account drawing and account purchase. Let's move further down. Drawing. Okay, so debit, drawing, purchase. Okay, drawing account, debit 200. Okay, why? Because of purchase. And then you may see this in purchase account. You credit purchase account. Okay, so drawing, purchase account, credit 200 because of drawing. Okay, all right, so that's it for general journal. Okay, what about purchase journal? Okay, so listen carefully. For purchase journal, okay, for purchase journal, for every supplier that we have recorded here, let's say for example we have Sweet Copy, maybe we have supplier like other bakers, okay, or whatever the name is, like Manjalaras, Neighborhood, or whatever it is. Okay, if we have a list of supplier, okay, for every supplier, okay, that we purchase on credit, so we are going to prepare one account for them. Okay, for each one of them there will be one account. Okay, so here we have Sweet Copy. Okay, account PL1, meaning that we are going to prepare an account called account payable Sweet Copy. Okay, but then we have GL8. What is this? So this is referring to purchase account, which represent the total of purchase journal. But for account payable PL1, PL2, we are going to prepare an individual account for account payable. Okay, since we have only one, so we are going to prepare one. Okay, we start with PL1. Okay, so PL1 is for Sweet Copy. Okay, so Sweet Copy. Sweet Copy is account payable. Sweet Copy. Alright, so this is how you do. Alright, so account payable is liability. Increase in liability, you credit. Increase in liability, you credit. Okay, so what happened here is, because in purchase journal we don't have any indication for debit or credit. Okay, it is something that you should know. Okay, for account Sweet Copy is liability. Okay, so for liability and increase, we credit. Okay, any addition to liability account, we credit. Alright, so we are going to credit that. Okay, 4th of June. Okay, this is from purchase journal. Yeah. Okay, so details is purchase from purchase journal. Okay, 3,500. Okay, but how do we record that in purchase account? Okay. Alright, so you have prepared for, let me change the color again. So you have prepared for PL1. So let's move to the next one, GL8, for purchase account. Okay, so let's go to GL8, purchase account, or let's prepare purchase account. If we already prepared the accounts, then we are going to update. But since this is the first time that we are going to prepare purchase account, okay, second time, but this one is on 23rd of, yes, second time. Alright, so we have here drawings, okay, meaning that we already prepared the purchase account. Okay, same code that we assigned. Okay, GL8. Alright, so we're going to update GL8. Okay, so how to transfer from purchase journal to purchase account? We transfer only the total, which is 3,500. Okay, from purchase journal. Okay, but we did not record here as Sweet Copy. No, because if we have more than one account, meaning that we have do we have to show every one of the account payable, every one of our supplier? No, we don't do that. Okay, we just take the total and then we are going to state here as total credit purchase from purchase journal on 30th of June. Okay, we did this at the end of the month. All right. Okay, next. Okay, next is SL1. SL1 is for account receivable. So account receivable KOI cupcake. So we should have one account receivable from this journal. So one account receivable KOI cupcake. We should have account receivable KOI cupcake. Yes, account receivable KOI cupcake. Alright, so this is an asset. Alright, so increase in asset because you sold goods to KOI cupcake. So on credit. Alright, so increase in revenue, increase in asset. So increase in asset you debit. So 15th of June sales from sales journal 1,000 you debit. Alright, what happened in sales? Sales is revenue. So we are going to increase sales account. We are going to credit sales account. Okay. Alright, so before that, okay, go back here. So GL6 for sales account. Okay, so meaning that every portfolio here represent an account. If it is a new account, then you create. If it is an existing account, then you update. Okay. Alright, so sales journal. Okay, the total is 1,000. So this is total credit sales. Okay, so sales increase, you credit. Okay, so 30th of June, total credit sales from sales journal is 1,000. Okay, next. Return outwards. Okay, so return outwards, we have PL1 here, GL10. Okay, we do have PL1 previously. We have recorded PL1, so we're going to update this account only. Okay, so return outward, meaning that you return goods to your customer. You return goods to your supplier. So what happened to your liability? Your liability decrease. So you are going to debit in account payable suite, copy PL1. Okay, so let's look for PL1. Okay, so PL1, return, purchase, return or return outward, 500. So we update here. Okay, like I said just now, return for credit purchase would reduce the liability. Which liability account? Account payable. So when liability reduce, you debit. Alright. Okay, so you debit here, 500. Okay, next. What about the total of return? The total of return outwards. Okay, so the total is 500. Okay, and then we assign GL10. Okay, which is purchase return account or return outwards account. Okay, no problem. You may use return outward. You may use purchase return. Okay. So let's see what do we have here. We have purchase return. Okay. So how do we transfer that? How we post to the ledger? Okay. So the amount is 500. Return outward journal. Okay. Total credit return. Total. Because we take the total. Okay. So we transfer here only the total. You don't have to show one by one return made by the supplier. No. We just take the total and then we transfer to purchase return account. We do the same for sales return account. Okay. Alright, so you go to the bottom of the sales return account or return inwards journal, okay, and then you're going to record it here, okay, total credit return inwards from return, total credit return inwards, okay, from return inward journal, 310, okay. So who made this return? KOI Cupcake. So let's see return inward journal. Okay, so return inwards journal. Okay, so we have look at GL11. So we are going to update SL1, which is account of KOI Cupcake. So KOI Cupcake is account receivable. So when KOI Cupcake return, what happened to account receivable? Account receivable reduced, meaning that we are going to credit account receivable KOI Cupcake. Okay, this amount 310. Okay, so let's go to account receivable KOI Cupcake. We are going to credit. Alright, so sales return, KOI Cupcake, 16th of June, sales return from return inward journal, 310. Okay, alright, so SL1 settle. Is it? Okay, so SL1 settle, GL11 settle. Okay, settle meaning this one settle. Okay, then we are going to look at cash receipt journal. Okay, so cash receipt journal, meaning that we are going to transfer this amount, this amount, all right, and then all accounts that we put it here as other account, this one and this one. Okay, so we are going to look at 1, 2, 3, 4, 5. Okay, 5 ledger. All right, so this is to update bank. Okay, so bank, how do we update in bank account? All right. Okay, so I'm going to look at also cash payment journal. All right, so we have here bank and cash, same code. Okay, same code. All right, so GL3 and GL4. So how do we post that to the ledger? All right. So compared to the previous lesson, okay, in bank account, we have so many items because we did not prepare a proper or appropriate journals. But when we prepare the journals, we already recorded every details in the journal. Okay, so when we post to the ledger, we only post the total, like this one. Okay, for bank account, we did not post one by one, but we post the total at the end of the month. Okay, total cash receipt from cash receipt journal 6,000, total cash payment from cash payment journal 3,600. And then you can immediately calculate the balance CD at the end of the year. Right, you can calculate the total. The higher total is 6,000. The difference between 6,000 and 3,600 is 2,400. That will become your balance CD. Alright, okay. Next, similarly for cash account, we are going to do the same thing. Total from cash receipt journal is the total cash receipt 10,450. Okay, and then for total cash payment from cash payment journal 6860, and then we can immediately calculate. All right, we can total up. Okay, both sides of account. Right, any difference, we pick the higher one as the total. Any difference with the lower total, which is on the credit side, so that will become the balance CD at the end of the month, 3590. All right, so compared to the previous topic 4, okay, we transfer everything to the ledger. But now, before we post to the ledger, we are going to generalize the transaction in the appropriate journal. Okay, meaning that all the details will be included in the journals, not in the account. All right, not in the account. Okay, all right. Okay, so this is how your bank account and cash account should look like. All right, we don't have details here, only the total amount of cash receipt and cash payment. Okay, all right, but we prepare the account. Why? Because we need to find out the total at the end of the month. Do we have any balance? All right, if we have any balance, how much is the balance? Is it a debit balance? Is it a credit balance? Do we overspend? Okay, or do we have any cash balance, all right, in hand, okay, or at the bank. Okay, all right, so settle with bank and cash. So now let's look at on the other side, all right, which is other account. So what account is this? GL2. Okay, again, refer to the folio. You must make sure that, okay, you think, okay, I have update this one, I have update this one. All right, so GL2. Okay, so GL2 is the capital. Okay, so let's go to capital. All right, here we have receive cash, okay, from capital account. All right, so in cash account you debit, in capital account you credit. Okay, so this is cash receipt from cash receipt journal 10,000. Okay, like I said just now, in case you miss that part. Okay, so for cash receipt journal, this side can be considered as debit side, and this side is to be credited. Okay, the account is to be credited. Okay, meaning that, okay, we have here 10,000. This is to be credited in what account? In capital account. We have 6,000 here to be credited in what account? In cash account. All right, okay, but for cash we have included that in cash payment journal, so no problem. All right, okay, for sales, okay, for sales, okay, we have sales 450. Okay, so we are going to credit sales. Okay, the total sales here, we are going to credit sales. We're going to take this one, GL6. Okay, GL6. All right, so we're going to take this one. All right, not individual account like this one. We're going to take the total. Okay, so the total is 450 for sales. Okay, so let's see how do we present that in sales account. Okay. So remember, on that side is to be credited. So we are going to credit 450 because why? It comes from cash receipt journal due to total cash sales. Alright, and that's it. Then we can close. Okay, for sales account, we have only 2 items. Okay, credit sales, total credit sales, total cash sales. Okay, and then you balance off. Okay, find the balance if any. Alright, and then that will become the. Okay, so that is the total and that is your balance CD. Okay, next for cash payment journal. Okay, so we have updated this one. Yes, yes. Alright, next. Okay, so this is, okay, for cash payment journal, on this side is to be credited, meaning that we are going to put this item, any number that we have here, okay, on the credit side of the account. Okay, of bank account, of cash account, of discount receive account. Okay, on this side, meaning that we are going to debit this account. Okay, if we have item here, account payable. For account payable, we did not transfer the total, but we are going to transfer on individual basis because it comes from different person. Okay, different supplier, different entity. All right, so this is 3,000 from Sweet Copy. To Sweet Copy, payment to Sweet Copy. So we are going to debit Sweet Copy account, debit this account, PL1. Alright, so this one we are going to transfer for purchase, we're going to transfer the total. Okay, for other account, we're going to transfer to individual account, which is, this is bank, no problem. Bank, we already add up in cash receipt journal. Okay, drawing, we're going to show in drawing. Salary, we're going to show this in salary account. Okay, so you have, look at this one actually. Okay, so we're going to look at this one. 3,000. 3,000 is account payable Sweet Copy. So we make payment to Sweet Copy. So what happened to Sweet Copy account? So we have here account payable Sweet Copy. Alright, so I just said just now that the item on your right hand side is to be debited. Alright, it's to be debited. So debit, meaning that we're going to debit that 3,000 cash payment journal bank. Okay. Alright, and then purchase. Okay, purchase. Okay, we have to look at together purchase. So now what happened in account? Okay, purchase account. We transfer only the total cash purchase from cash payment journal of 550. So that's it. So in purchase account, what to expect is we should have total credit, total cash purchase. Alright, and then drawing. That's it. Okay, and you get the balance. You calculate the total. Alright, any different here. Okay, so that will become your balance CD. Okay, right, that's it. Okay, what else do we have on the right hand side in cash payment journal? Okay, we have settled with this one settled. Okay, we have bank, drawing, and salary. Okay, so now let's look at bank settle. Okay, we have include bank in cash receipt journal, and we have transferred everything, no problem. So we left with drawings and salary. So look at drawing. Okay, so drawing and salary. Okay, drawing to be debited drawing. So cash from cash payment journal 310. Salary, bank, cash payment journal 600. Okay, and then you balance off account. Okay, you balance off account. Alright, and that's it. Okay, and that's it. And then the balance will be transferred to the trial balance. From the trial balance, you prepare the financial statements. Okay, so basically that is the difference between. So I want you to compare side by side. Okay, these two notes. Okay, topic 4 and 5. Okay, to see how it differs from the previous lesson. But the one that you have to use when you prepare the group assignment. Okay, for your group assignment, when you create the business transaction, when you generalize the transaction in the appropriate journal, you have to generalize in these 7 types of journal. Okay, and then when you transfer to the ledger, it must comes from your journal. Okay, you are no longer transferring item on individual basis, okay, separately, but you're going to, for example, for purchase account, you're going to transfer only the total cash purchase, total credit purchase. Okay, similarly for sales journal, you will have total cash sales, total credit sales. Okay, we did not disclose the details in ledger. We disclose the details in journals. All right. Similarly for bank, And also cash account, we only have total cash receipt, total cash payment, okay, total cash receipt and total cash payment again, all right, in the other account. Okay, all right, so please compare between these two notes, okay, note 4 and notes 5, all right. But at the end of the day, okay, you are going to get the same balance CD, all right, balance. When you balance off, okay, when you look at these two notes, all right, you are going to get the same, all right, the same balance. And when you prepare the trial balance, you are going to get the same total of debit and credit. It's just that the way we present is different now, okay, because you have been introduced to the different types of journal and also different types of ledgers, okay, how you push from the journal to the ledger, all right, if we have these 7 types of journal compared to if we have only general journal like last time. Okay, all right, so that's all for topic 5. Thank you.